Stocks have been so much more attractive than bonds for a long time now, and that's partly intentional on the part of the Fed. I mean, they wanted assets to increase in value, and the way to do it was to reduce that gravity force of higher interest rates.
The Fed has been sounding a little more hawkish. Even Janet Yellen has been sounding a little more hawkish. Does that concern you, or are people getting complacent, thinking rates are going to be low for an extended period of time here?
Well, I think they expect them to increase, but the question is how much. I mean, if 3 years from now interest rates are 100 basis points higher than this, stocks will still look cheap at these prices. If they're 300 or 400 basis points, they won't look cheap. And Janet Yellen doesn't know what she would do 3 years from now. I mean, she's got more of a job than that's simple factor of the stock market. It's really interesting because the Fed has said that they'd like to see 2% inflation. I mean, that's fairly recent. That would Paul Volcker would not have slept if he'd ever heard that in the 80s. But if the U.S. government is borrowing at 10 years from you at 2.3%, and their own instrument, the Fed, is saying we would really like money to become worth 2% a year less, they're not promising you very much in terms of real terms for saving.
Right. So Janet Yellen, you said she's got a big job. The question is, does she keep that job, or does President Trump appoint someone else? And it seems like two of the leading figures right now are either Kevin Warsh or Jerome Powell. As an investor, do you have to spend some time thinking about who's running the Fed to think about what stock prices are going to do if interest rates are the most important factor?
Yeah, I don't spend time thinking about it, but it wouldn't do me any good to think about it. I wouldn't know the answer in the end. And most of the time, the Fed is not that important. Occasionally, it's everything.
They've been awfully important the last 8 or 9, 10 years.
It can be the only game in town. Right. There was only one person that, in September of 2008, could walk out like the sheriff into the street and say, you know, that this isn't going any further. We're going to do whatever is necessary and have the power to do it. I mean, the Fed is of enormous importance during a panic, and people tend to hang on their every word in between. We don't pay any attention to it.
But you have said that interest rates are the most important factor, so anybody who's trying to play the market and figure things out, maybe not as long of a term investor as you're going to be with these things, should be thinking about this.
Well, but if they really think they can figure it out, they might as well play the bond market. I mean, they don't really have to get over to the stock market. So, but I can't remember a decision we've ever made based on the Fed, except for the fact that I felt that Bernanke and Paulson and Geithner, but I felt the Fed would do the right thing in the fall of 2008. We had an incredible economic machine.